Hi everyone. In this video, I want to talk a little more about the Social Security Fairness Act and the retroactive payment. Will this retroactive payment be taxable? This is something important for those of you who will be receiving this payment to be aware of. I just want to share a little information in this video so that those of you who haven't heard about it yet can have a little bit more information. Because right now, about 3,200,000 people will be receiving this payment. Social Security has already sent payments to over 1 million people, but there are still about 2 million more who will receive their retroactive payment in March. And as you can see, the average payment is around $6,710 per person. So, will you have to pay taxes on this retroactive payment? Let me give you an example. If you receive $6,000 from the retroactive payment, will it be taxed? Whether or not you owe taxes depends on your tax filing status, whether you file as a single individual or file jointly with your spouse. Since you are receiving this payment this year, you will report it on next year's tax return. And because this money is considered Social Security benefits, whether it will be taxed depends on your total income, also known as combined income. Take a look at this chart right here, and you'll see that it explains how your total income, your combined income, is calculated. Your combined income is half of your total Social Security benefits received during the year. So, using the example I mentioned earlier, if you receive $6,000 in retroactive payments, you'll need to add that amount to the total Social Security benefits you've received monthly throughout this year. Add up those two amounts, the retroactive payment and the total benefits received for the entire year. Then only half of that total is counted, just half. Okay, and if you have any other taxable income, you'll need to add that as well. That final number is what determines your combined income. Once you have your total combined income, you'll then compare that number to the income threshold set by the IRS. This will determine whether you need to pay taxes on your Social Security benefits for the year. It all depends on your tax filing status, whether you file as a single individual or jointly with your spouse. If you file taxes as a single individual, the key number to focus on is $25,000 for the year 2025. If your total combined income is less than $25,000, then you do not have to pay any taxes on your Social Security benefits. That applies to federal taxes. If your combined income is between $25,000 and $34,000, then up to 50% of your Social Security benefits may be taxable. If your combined income is over $34,000, then up to 85% of your Social Security benefits could be subject to taxes. These are the federal tax rules. However, if you live in a state that taxes Social Security benefits, then you may also have to pay state taxes in addition to federal taxes. Now, that was for those who file taxes as a single individual. For those who file jointly with their spouse, it depends on your total combined income. If your combined income is $32,000 or less, then you do not have to pay any taxes on your Social Security benefits. If your combined income is between $32,001 and $44,000, then up to 50% of your Social Security benefits may be taxable. If your combined income is over $44,000, then up to 85% of your Social Security benefits could be subject to taxes. And of course, this applies to federal taxes. Like I mentioned earlier, if you live in a state that taxes Social Security benefits, then you may also have to pay state taxes in addition to federal taxes. All right. So as you can see, whether or not the retroactive payment you receive will be taxed depends on your total income for this year, 2025. It all comes down to your combined income for the year. That's just a little bit of what I wanted to share on this topic. I'll see you in the next videos. Thank you so much.